Hello and welcome back to the Note. It's the end of the week and indeed the month, and it hasn't been a good January for the US stock market, but that really doesn't matter very much. The S&P actually fell by more than this in January of last year, and 2014 ended up being a perfectly good year for the US stock market. Let me try to put that into some perspective. Now, what is interesting, as you can see from this chart, is that the US has started to underperform the rest of the developed world, as shown by the MSCI EFA index. We had a dramatic trend through much of last year that the US outperformed the rest of the world month by month. That does seem to have reversed so far in January. Why was that? Largely because the European Central Bank decided to resort to sovereign QE bond purchases. That also had the effect, beyond stimulating European stocks, of strengthening the dollar and, as you can see from this chart, continuing to push down sovereign bond yields. Now, this trend really is getting quite dramatic. It starts at the point when the Fed embarked on taper talk in May of 2013, and you can see that Treasury yields are almost back to where they were then, even though QE has now been fully tapered off. Meanwhile, German Bund yields are significantly lower, and Swiss 10-year yields are very negative, thanks to the very drastic policies of the Swiss National Bank. But also, while central bank policies stay as they are, it's also difficult to see how they can reverse. But it does make the rest of the investing universe take on rather an Alice in Wonderland quality. Now, the single most important market out there at the moment, of course, is oil. The dramatic fall in crude prices last year had huge ramifications elsewhere. And if we take a look at Brent crude over the last 12 months, you can see that it does look quite interestingly as though we might finally have hit a level this month. Too soon to say that with any confidence, and certainly too soon to ascribe too much significance to the very dramatic Friday afternoon rally we've just enjoyed in Brent crude, which is up some 8% at one point. But for the time being, it does look as though that great fall in oil has been arrested. That might begin to allow people to plan with some certainty. Now, for the week coming up, we have the monthly meeting of the Bank of England, at which something might occur. We also, since the first week of the month, have plenty of economic data to look forward to, with, as ever, the non-farm payroll data here in the US on Friday being perhaps the most important. We'll need to keep monitoring the position in Greece as the new government tries to negotiate a new deal for itself. But perhaps most importantly, we're going to hear from a lot of companies in both the US and Europe with their results for the whole of last year. So far, earnings season appears, if you exclude energy companies who've had a disaster, earnings season so far seems to have been relatively positive. Companies have done somewhat better than many investors might have thought. We need to see if that can continue.